Hey guys, Czar here. Good morning to you. Happy Friday. It's Friday, May 31st. Can't believe it's the last day of May already. This market's dropping off here in the pre-market. It's 9:28, almost 9:29, so about a minute and a half away from the open of New York. I have a daily chart in the top left, 30-minute bottom left, and a 1-minute chart for now on the right-hand side. This is the 1-minute Three Sisters, NASDAQ, S&P, and Dow with VWAP, volume weighted average price, 2.5 standard deviations, waiting for the first 1-minute candle to open. That first 1-minute candle, the span of travel, will be the 1-minute open range that I use just as some kind of a guidepost or signpost, if you will, for relative price action from that deviation from the open, essentially, and we'll make some decisions using that as one of the units of conviction. And we'll take it from there. We had PPI this morning, Producer Price Index, of course, and we had a big rally on that news. Right there, that's the 30-minute candle at 8:30. Big run-up. We have pulled back and erased much of this down move, or this down leg, or at least a good portion of the down move from yesterday in the New York session, which actually started way up here. And we have surpassed about 50% or 618 of a Fibonacci retracement, pretty much, I believe. Let's take a look at that. We are open, by the way. There we go. Yeah, so we tapped 618. Let's be watching this now, guys, to see how the market reacts on this 1-minute open candle. I will be cutting out dead air, sideways grinding action, non-teaching moments, things of that nature to keep this video nice and tight. And I know that many of you do appreciate how I just kind of focus in on what we're doing here. I'm going to be very patient here on the open, guys. I'm not going to jump in just because we break trend lines or minor pivots or VWAP or EMAs or the open range or any of that stuff by itself, right? This is about putting together a story and a picture, incorporating everything, including the daily chart, right? We are below last week's range of travel. That's the two blue lines you see there. On the NASDAQ, we are below also on the S&P and way below on the Dow. The Dow's been the weakest performer of late from a structural standpoint, not even necessarily percentages, although I believe that to be true as well. So firming up here today, bodies are marginally bullish on the NASDAQ and the S&P, and again, almost an indecision candle here, doji style candle so far on the Dow, but we are early here in New York. It is 9:31 and a half. Let's go back to the NASDAQ. I'll be watching to see how everything reacts here now. And back into the open range here on the NASDAQ, above open range on the S&P and on the Dow. Bounced right off VWAP here on the NASDAQ. Still nothing for me to do here, guys. We are getting some more alignment now in that all three are grinding higher, but no key break of structure here for me to make this worthwhile yet. You can see here on the 30-minute chart, let me just make that full size, how we had actually broken down below the pre-market candle here, looking like we were going to resume lower, and that did not continue. You see that there? VWAP is right in here, actually bounced right off. I'll show that to you on this chart. There it is. Tagged VWAP precisely. This is very much a mixed picture. You'll see the Dow actually tagged VWAP as well, very precisely inside of the open range. It's actually the bottom end of the open range. Now, I don't give VWAP a huge amount of power here, guys, in the morning, given that we haven't factored in the market open volume from New York, that gigantic market, but it matters. You know, it does. It certainly counts as a unit of conviction, and we have been in no man's land here this morning below the open range. We'll keep monitoring this. Looks like it might be rounding over a little bit, but without the support of the S&P and the Dow, I would hesitate to take shorts here, I think. I'll see how we are behaving as things play out here a little bit more. All right, guys, just watching here. Nothing convincing for me here at all. My sense is that I'm leaning towards shorts, believe it or not, even though all three of these are above the open range, and I certainly wouldn't be shorting above the open range. But my sense is that shorts might be a more resourceful play here if price action sets up accordingly. And that has everything to do with daily cascade lower, breaking yesterday's low, multi-day low, of course, breaking the pre-market 30-minute candle low here on the open right here, right? They're rallying back up again. Now, if we get a failure to the downside again, you'll often see me take a third pass of the open range. Not always, but you see this weakness coming in here. This could be indicative of something. Three sisters, all pulling back now. I will need more structurally in order to actually take a short here. But given this big impulse down, the fact that we had a very bullish reaction to the PPI news, which came in as expected, I believe. So interesting reaction there by the market. And then not being able to go higher here on the open, right? All right, guys, sell stop order session low. Here we go. Here we go. Stop above the high of the day. Right there. And I'm in, guys. Looking for 1 hour here. This is some tricky price action. Patience now. And there it is, guys. Took a little while to play out, but not too long. So why did I take a short? Well, look at that daily chart, guys. 1, 2, 3 cascading down candles. We had broken yesterday's low, which had broken many prior days' low on the NASDAQ. We had a nice orderly pullback here in a downtrend on the 30-minute. Let me take you over to the 30-minute big so you can really see this in detail. I'm trying to explain these trades in detail. Impulse on the 30-minute, corrective, impulse, meandering through Asia and the first part of London. Then the news came out, right? Bullish reaction, completing a corrective, right? So impulse, corrective, impulse, corrective, impulse, corrective. And if you pull out your Fibonacci lines, I don't use these in my own trading, but I know many of you do. Of this leg, we were into 618 to 718. See that there? But the main leg is here. And where did we tag? Right into the 50 and 618, basically tagging the 618, and then beginning to round over on the open. And so there's the two pre-market candles with equal bodies. So even in the pre-market, the candle right before the New York Open, we had put in equal highs on bodies, failed to make a new high on actual prices, right, which means the wicks. And then the first candle broke down below. Now that's awfully quick to take a trade right out of the gate. So that was right there without any kind of breathing room here. And then we get the orderly pullback of this leg, right? So impulse, corrective, rolling over and then dropping down, breaking the session low, below the 9, below the 21, below open range, below VWAP at that time. And then we also had agreement on the sisters. Where do we have agreement? Well, here's the entry. You see my NASDAQ cursor right there is right here. S&P driving back down below EMAs and the Dow driving back down below EMAs. That's the same time candle right there. 1, 2, 3. And I think the rest is history. Pretty self-explanatory. This is a trend continuation trade. It's trend continuation on the daily. It is trend continuation on the 30. It's trend continuation on the 1-minute chart. So we have a synchronicity happening here on multiple time frames and, of course, a market open play. Thanks for being here, guys. Happy Friday. Appreciate you. Have an amazing weekend. If I don't see you again this afternoon, talk soon. Take care.